Hello and welcome to this week's Real Estate Report on the Finance News Network. I'm Lelda Smith. This week we continue our series looking at council areas with the greatest increase in hold periods over the last 5 years, with a focus on 2 council areas in New South Wales. We speak with Tim Lawless from RP Data about home prices in October, and in our tax tip we look at claiming the depreciation of your investment property against your taxable income. But first, let's catch up on the latest property news with Tracy Tandon.
New figures from the Housing Industry Association show that expenditure on new housing and on alterations and additions fell in the September quarter of 2010. HIA's senior economist Andrew Harvey says the outcome was not unexpected and was largely due to the lagged effects of earlier interest rate rises, coupled with tighter credit conditions. New housing expenditure fell by 1.3% in the September quarter, and expenditure on alterations and additions fell by 2.5%.
This week we continue our series looking at council areas with the greatest increase in hold periods over the last 5 years, with a focus on 2 council areas in New South Wales. A hold period represents the time between when a property is bought and sold, and can be an indication of the appreciation rates and desirability of the area. First, let's look at Tumut Shire, a council area located south of Sydney and around 200 kilometres west of Canberra. According to figures from RP Data, houses in Tumut Shire recorded the largest increase in hold periods in New South Wales for the 5 years to 2010. This year, the average hold period is currently 9.3 years, up from 5.7 years in 2005. With a population of 10,801 in the last census, the picturesque Tumut Shire stretches from the small towns of Brungle in the north to Tumut, after which the shire takes its name, and Cabramura in the south. The regional area is dotted with small towns, and living in the shire offers good-sized blocks with a variety of housing types, some dating as far back as the early 1900s. Surrounded by a number of rivers and state forests, including Australia's highest mountain, Mount Kosciuszko, the area is close to Australia's premier ski resorts and national parks. The region is supported by forestry and agricultural industries, such as the Visiboard operations in Tumut. Nature-based recreational activities are popular, from camping to canoeing or fishing for trout in the Blurring Dam. Further west along the Snowy Mountains Highway lies the old gold mining town of Adelong that is now supported by the pastoral industry. Both the history and landscape are popular drawcards for visitors. According to figures from RP Data, houses in Tumut Shire recorded the largest increase in hold periods in New South Wales for the 5 years to 2010. This year, the average hold period is currently 9.3 years, up from 5.7 years in 2005. The median price of a house in Tumut Shire has risen 24.5% in the 5-year period to $215,000 in 2010. Our next council area is Kempsey, located north of Sydney and around 50 kilometres north of Port Macquarie. RP Data figures reveal houses in Kempsey recorded the second largest increase in hold periods in New South Wales for the 5 years to 2010. This year, the average hold period is currently 10.1 years, up from 6.6 years in 2005. With a population of 27,387 in the last census, Kempsey Shire sits next to the coast of the Pacific Ocean and includes the towns of South West Rocks, Oceanside and Crescent Head. Known for its beaches and relaxed seaside lifestyle, the Shire enjoys a subtropical climate. The town of Kempsey rests around the Macleay River, where the Pacific highways meet the North Coast Railway line, providing access to a network of transport options. As the town sits atop of a floodplain, many houses have been moved to higher ground. Initially supported by the logging and sawmilling industry, locals have now moved to farming and tourism to generate income. The landscape of Kempsey Shire encourages a range of outdoor activities. Bushwalking and forest drives offer a taste of the region's unique flora and fauna, while the expansive coastline naturally lends itself to water activities, such as surfing, kayaking and boating. Taking a look at the figures, houses in Kempsey recorded the second largest increase in hold periods in New South Wales for the 5 years to 2010. This year, the average hold period is currently 10.1 years, up from 6.6 years in 2005. The median price of a house in Kempsey has lifted 11.1% in the 5-year period to $216,000 in 2010. Let's now turn to our interview. This week we speak with RP Data's Residential Research Director, Tim Lawless, about house prices in October.
Well, we're actually expecting either a flat result, which is plus 0.3% really is a flat result, but perhaps even a negative result in the October figures. If you look at the data from June to October, we've actually seen a 0.7% decline in property values. So we are seeing a very modest trend downwards. But keeping in mind, November figures are around the corner at the end of this month, and we probably will see another negative result based on the rise in interest rates we saw in November. I don't think we'll see a recovery in lost ground anytime soon. Perhaps within 12 to 18 months, we might start to see some modest growth return to the market. But our view on the market going forward, at least the next 12 months, is going to be either relatively flat conditions or maybe some further negative movements, as you say, depending on interest rates. And speculation is that we won't see too many interest rates over 2011. Financial markets are suggesting only 1. Economists are suggesting 2, potentially 3. Well, the next 12 months in the Australian property market is likely to be quite sedate. A really good example would be, say, what happened to the marketplace between 2004 and 2006. If you remember, back in 01 to 03 it was the property boom, and after that prices were very much flat in Australia. Over the 2 years post that period, we saw 5% gain over the whole 2-year period, and that's probably what we're going to be seeing in Australia over the coming 12 to 18 months. At that time, back in 2004, unemployment was about 5.9%, so a little bit higher than what it is at the moment. The resources sector was just about to start ramping up as well, and we just come out of a very strong growth phase, so quite similar to the market that we're looking at the moment.
And now to the tax tip of the week from Depreciator, the tax depreciation schedule specialists. As a homeowner, you can claim the depreciation of your investment property against your taxable income. There are 2 types of allowances available: depreciation on plant and equipment and depreciation on building allowance. Plant and equipment includes items within the building such as dishwashers, ovens, carpets and blinds, whereas building allowances refers to the construction costs of the building itself, such as brickwork and concrete. Both these costs can be offset against your assessable income. As always, do remember to consult with a tax accountant or tax professional before making any tax-related decisions. And that is the Real Estate Report for Monday the 13th of December. Thanks for joining us. I'm Lel De Smits for the Finance News Network.